It's something we all know. Canada is in the middle of a housing crisis. Many of us are living it. In Toronto, the dream of buying a house for some faded long ago. Even condos, once considered the starter market, can be out of reach. The average selling price for a Toronto condo is now $765,000, double what it was a decade ago. Experts say one of the biggest solutions to making housing more affordable is boosting supply. But it turns out Toronto isn't keeping up, and demand is only expected to soar.
We're simply not building enough housing for the demand that is within the GTA. In the 1970s, one home was being built for every 2 people within the GTA. Currently, it's 1 home for every 4. So the math is just not working.
We desperately need more housing, and yet housing production has fallen off a cliff. It highlights where the real issue is, which is affordability. People can't afford the housing that's being built today, and the cost to build that housing has become too high.
New condo construction is down big time. According to Urban Nation, which tracks development in the Greater Toronto Hamilton area, year to date, new condo starts fell by 53% compared to this time last year. Compared to 2022, it's even worse, down 73%. So what's happening? The Canada Mortgage and Housing Corporation says one of the reasons behind the construction slowdown is interest rates, though how rates impact condos and rentals are different. The CMHC says condo developers typically sell about 70% of units even before shovels hit the ground. That's in order to secure the financing needed to start the project. Rental developers, meanwhile, must secure all of their financing before construction starts, often through large-scale investors and sometimes developers themselves. Higher rates impact everyone from investors to developers and buyers. Speaking of buyers, take a look at these numbers. Year to date, new condo sales dropped 63% from this time last year. Compared to 2021, condo sales plummeted by 84%. Urban Nation says the new condo market is on track for its slowest year since 1996.
The main hurdle facing developers today is the lack of demand on the sales side. So many developers have product in market and they can't pre-sell that product. And the way we finance development projects in Canada is if it's new construction, we pre-sell those buildings. And today, if you're not able to meet that sales threshold, then the project is effectively stalled. And so most developers are in a place where they've got product in the market, the product is not selling, and so everything is kind of put on pause.
In your report, you said we remain concerned that starts in Toronto have yet to reflect the full impact of higher interest rates. So what do you mean by that?
Individual investors were fairly quick to withdraw their money from financing new condo construction. We think that the large investors are still hanging in there, so we're seeing a lagged effect basically of high interest rates. Those large investors obviously have deeper funds, they're in there for really the long haul, but higher interest rates do affect them as well. And so we're a bit concerned that they might withdraw from building more stuff as well. And this would particularly affect the large purpose-built rental. Now, the reason this is important is that Toronto, for a lot of people, has become so unaffordable that rental is the most practical, affordable alternative. And so if we get less rental being built, and Toronto seems to have found it difficult to build rental, then it creates a long-term affordability challenge, or I should say it exacerbates the problem that we currently face.
Even as interest rates trend down, he says that alone isn't the silver bullet to boost supply.
One of the reasons that the Bank of Canada is reducing interest rates is because there's a little bit of weakness in the Canadian economy. So even if interest rates come down, the weakness in the economy may mean that investors are very reluctant to put money to work. So it's not just a question of reducing interest rates, it's a question of restoring economic growth.
Developers say if construction continues to crawl, by 2027, things could be catastrophic. One of the largest rental developers in the country puts it this way.
We're down, depending on what data you're looking at, 75 to 90% on new starts since 2.5 years ago. The issue is a ripple effect around that. So we're starting to see trades, the workforce that we already had capacity issues when times were really good, exit the trade base and do other jobs. So to restart that side of the economy is going to be very difficult. And so the longer this persists, the longer this goes, the more difficult it's going to be to start it up. In 2.5 years, we are going to have a rental catastrophe in this city. We have to get more supply into the market. We can't wait any longer.
This empty lot on King Street East, he says, should be a flurry of construction. Instead, plans for 2 rental towers with some 1,000 units are on pause.
If you go there, you'll see a fully graded site. We have all the supports around the heritage facades. We could put a shovel in the ground tomorrow. We have the building permit on the clerk's desk ready to be pulled by the city.
But yeah, just have to wait until what?
We really need either a significant drop in interest rates or we need the government to step up and help.
Well, interest rates are dropping. Experts say the pace isn't nearly quick enough to spur the kind of construction needed to meet the growing demand. That's why developers, in the meantime, are hoping all levels of government can do more, from waiving property taxes on purpose-built rentals to bringing down development charges and fees and speeding up approvals for projects. There is no one quick fix. It is a multifaceted problem that is complex and will take time. But what's clear is that what's coming for Toronto in just a couple of years is potentially very low supply of new condos and rentals, which is only expected to make housing in the city even more expensive. Shannon Martin, CBC News, Toronto.